Hi there traders, and welcome to Trade Setup. What I'm going to walk through with you now is a recent winning alert that we had on spot gold. You'll see the hourly chart up here. Now the importance of this video is just to highlight the management of the alert and how we manage something when it doesn't quite go in our favor or it doesn't quite go as we expect. Okay, so what you'll see is the entry and the exits. So we did enter on a push lower through 1720. We ended up taking a partial exit into the previous low at 1710 just to lock away some gains, and then we did lower the remaining stop loss, which was eventually triggered at 1717. Okay, so what we'll show you now on the charts is just the reasoning behind the management and what we're expecting in the trade. So you'll see this is the actual chart here, and this is the action which played out. Now, what we were looking for, you can see there was a resistance zone that had held up at around 1740 to 45. Okay, so this had held up quite a few times, and I think this was either the second or third test of that level which failed. All right, so what it did, the market's pressed down and then it grinded it all the way back up, holding higher lows, higher highs as buyers continued to push price up into that zone where it eventually failed. So what that did was build up a whole lot of buyers into that area that have to eventually, if they don't want to take a loss, they have to sell back into the market to close out. Now, whether they're late into the trend and they're locking away a small loss, or they're earlier into the trend and they're locking away a gain, either way, they have to sell back into the market. And then what that creates for us is an opportunity on the downside if it all plays out correctly. So what we were looking for at that stage, you can see that this trend up was starting to break with this little push down. We built a lower high here. And what we're looking for is a push all the way back down into this support zone at around 1675, say. So we thought if this market had to completely unravel and all these buyers had to jump ship, we could have seen, or we were expecting, that the market was going to pressure all the way down to at least somewhere around that previous major low. Okay, so we did get that lower high coming into play. Now, the reason we didn't short through there is because we could have seen this action just held up above the anchor level. Now, our anchor level to us was at 1722. And if the market was going to hold up there and consolidate around these highs, there's a good chance that it's going to continue on through 1744 and go into higher levels. And that way, if we shorted here, we could have been on side for a little bit, and then the action could have turned around and stopped us out quite quickly. All right, so what we would prefer is to see pressure put on these buyers. And that happens generally when you get a break of the anchor, and then you get a move into lower highs and the market pressuring lower. So that's what we're looking for. And that's why that's the reason why we had the entry on a push through 1722 at 1720. Okay, that's the break of the anchor. Our risk was initially around the 1735 area, and we saw the price was pushing down. So the first port of call we thought we could have had some trouble was around this low at 1708. And of course we did. That's exactly what we saw. So we were happy to take a partial exit off into that zone. That was about a 1-to-1, or roughly 1-to-1 on the trade at that stage. But what we did see was buyers starting to soak up that selling pressure, and you can see that the momentum down was starting to fade and was starting to level out. And we also saw that selling pressure was quite constant once we saw this breakdown, and it was in that oversold territory for quite a while. So eventually you're going to see, if the buyers start to step up and start to soak up that selling pressure, there's a good chance we could expect a pullback into that trend. And if we do see that pullback, we'd much rather be on the sidelines reassessing the trade. Okay, so that's the reasoning why we started to move that down. Once we saw that start to play out and the buyers starting to step in, we're happy to move the stop down after the partial exit was taken, just to lock in a little bit more gain, but it has to be above the most recent lower high, because there's a good chance that if this does hold, it starts to pop back up above 1708, and then we see the selling pressure resume. That could continue the trend all the way down. So that's the reason why we don't get out, but it's also a good reason why we're happy just to tighten up that risk and manage that accordingly. All right, so eventually the market did pop. We got stopped out at that 1717 area, and that closed off the alert. So what this does highlight is the importance of managing your risk correctly, and that's basically our job. So we're only risk managers at the end of the day, and we can only manage our risk accordingly as what we see play out. So once we actually identified that the market wasn't heading down and wasn't playing out to expect it, the time comes we have to start managing correctly for the unsavory opportunity that does pop high and we do get stopped out. I'd much rather tighten up the risk and be wrong if it can reset and get back in, than be wrong and it stopped you out all the way back up here, and you've taken a partial, you've stopped out in the second half, and it becomes a net zero trade. So that's the reasoning behind it all. I hope you enjoy this video. Remember, if you do have any questions, please feel free to send us an email to support@tradesetup.com.au. Thanks very much for listening, and we'll speak to you soon.